We are actually coming up on an interesting stock play. It's an LNG player, and they're in that position where they can provide regasification services as well as tanker services.
Yeah.
So
Well,
something to look out for.
You are the second person to come on this podcast recently that's been very bullish on the tankers. And other person being Mr. Christian DeHamer.
Me and Chris might have to talk about the tanker market. I'm not as
Is he stealing your ideas? Or
I'm not as convinced about the oil tanker market.
Okay. All right, everyone, welcome to the show. We got Keith Kohl joining us today. Keith is a market analyst specializing in technology and energy industries, and he's here today to talk to us about some market opportunities in those sectors. So, kind of want to just jump right into it with the diesel supply shortage. I've kind of been seeing some headlines. I don't know anything about it. That we're going to run out of diesel. Is this bullshit or what?
Okay. It is and it isn't.
Yeah.
Right. So whenever you see that days of supply number, 25 or whatever it is, it's complete bullshit. So when I say bullshit, I mean the rhetoric around it you see in the media.
Yeah.
Okay. If you look at the days of supply, right, on that exact same EIA chart where they all get it from, over the last 15 years, it's been averaging 30 days.
Okay.
It's not a crisis,
Yeah.
right? What is disturbing is that diesel or distillate inventories are far, far below the 5-year average right now. I think they're I want to take a guess and say 20% less than what they were over the 5-year average. Obviously, it's causing a diesel spike in prices, right? I think on my way here, I saw that diesel in Baltimore was like $5.29. It's much, much higher in California. It's much higher in other places. But the issue, I think, is more around demand and the lack of inventories. Specifically around diesel, we have more of a refining issue than, say, a drilling issue.
Yeah.
Right?
Is there something about the refining process that?
Well, if you notice, you see President Biden pretty much attacking oil companies nonstop, right? Well, the trade association that made up refiners keep on answering Biden with a letter, basically, and just explaining that market factors are what's determining the price, not just some evil old guy at the top just twiddling his thumbs like Montgomery Burns.
Yeah.
Right? That's not how it's working. So, in essence, diesel is a huge issue because 72% of trucking, 72% of cargo in the U.S. freight is transported by truck, right? So that's not even getting into the diesel issue out in Europe, which is a whole different topic and podcast that we can do. But over here, basically, we're seeing high demand, and we are refining at around 94, 95% capacity. And that's pretty much where it's been the whole time. So nothing's really changed, right? Aside from losing some capacity over the last couple of years. You have things like incentive to go with renewable diesel. You have other obstacles for these refining companies, especially out in California. If you notice, everybody's crying about diesel prices on the West Coast, and if you look at the chart, they're $2-3 above where the East Coast is, and it's mostly because of I'd say a weak investment environment out in the West Coast. You're not going to spend billions of dollars building up your diesel, or you're not going to spend billions of dollars building up your refinery capacity, right? When the government's just going to basically say you can't do it.
Sure.
Right. You don't make investment decisions.
Do they tax the hell out of it out there too?
It is. I mean, that's kind of the funny thing about high gas and diesel prices is when you see Biden come out and say, well, why don't you just lower the price at the pump? He doesn't realize that overwhelming gas stations are completely cell-owned. Forget that. It's not Exxon that's saying, well, you're gonna have to sell it for $4 so that the average Joe can get shrimped a little bit. But what was I saying?
I don't know, we were talking about diesel supply shortage and.
Right. No, I was heading down this path, but
Well, do you want to talk about Biden? Because you've been writing about Biden a little bit lately. You seem to have some gripes with his energy policy.
So here's the thing with Biden. This podcast probably isn't going to be out until after the midterms, I would assume, unless you guys have a really quick turnaround.
When are them? How many days?
Like 4.
Yeah, probably not.
Right. So what we're going to find out is what I should say it like this. What's important is what the rhetoric is coming out after the midterms. Because up until now, you can chalk up everything to, politicizing the issue, trying to get Democrats to the voting booths, trying to, just win for your team. Right. That's why you attack oil companies, because it's an easy W in the media until they start fighting back. And
sure.
Yeah. But it doesn't do anything for prices. But what's interesting is that if he just suspends the federal tax holiday and states do similar things, especially California, if you take away the taxes, you can immediately drop the price of the pump. I think that's the most effective way to do it. Biden's running into an issue where he's fighting with everybody, right? You're fighting with the Saudis, kind of begging them kind of on the side to not cut production, and then just out of the blue they cut production. So obviously it looks like, and they called him out for politicizing it, which I mean everybody does. Every president probably since gasoline was running has been politicizing.
Could you elaborate on the Saudi situation a little bit? Because I kind of I saw a headline the other day. I was talking about how the Saudis could basically embarrass Biden, or
sure.
What went down with that?
Whatever clickbait you're reading is I'm sure there's some great adjectives for it. But basically, you're looking at OPEC Plus, which is just the normal 13-member OPEC nation plus Russia, a couple other countries, but it's mostly Saudi Arabia and Russia, right? And so with the oil sanctions on Russia, right, that we levied last year, right, it didn't really do anything. So whenever you hear about this Putin's war on oil and it's all Putin's fault, it's kind of bullshit, because we're basically not taking any supply out of the global market. That Russian oil is actually going to China.
Sure.
Now, normally, if you would be smart, you'd be able to leverage the Saudis against Russia, because the Saudis are China's, Asia is pretty much where the Saudis want to start selling oil to, right? And so it's like let me think how I'm going to say this. So there is a direct conflict between Russia and Saudis selling China oil, right? But Biden doesn't exploit that. What he does, he goes on the attack, saying you guys got to cut production.
You mean a conflict between China and Russia?
There's a conflict of interest. Competition's a much better word. Thank you. So there's a competition between the two for basically China, India. I think it was last month or something like that. About 1 million barrels of oil per day went into India, which is the highest ever. So you're not really sanctioning Russia's oil and stopping that oil from getting into the market. You're just shifting where it's going, right? It's going to China, to India. And so the thing is, in the past, back in I'd say pre-2007, back before this tight oil boom exploded in the U.S., we were on the hook for OPEC oil, right? It was basically OPEC and Canada. That was supplying all our oil. For the last 45 years, U.S. oil production has been in this irreversible decline, right? And it only took until, in 2007, we started horizontal drilling and fracturing, and that just unlocked an ocean of oil, caused a whole bunch of drilling during the next 10 years, and we were at 13 million barrels per day. The problem is we sort of lost so as that oil production went up, we lost our dependence to Saudi Arabia, if that makes sense.
Yeah.
We're no longer beholden to them for oil, and they know it, right? So the U.S. consumes an ungodly amount of petroleum, right? And it's been that way for decades, like a pretty even line. We've been consuming up to about 20 million barrels per day of petroleum products for about decades. Between 15 and 20, I'd say, right?
Yeah.
But there's not huge growth. All the growth is going to come from China. So when Biden goes to, I guess, convince the Saudis to cut production, he can't really work from a point of leverage because the Saudis don't need us anymore.
Sure.
And in fact, a couple weeks ago, the Saudis came out with a new foreign policy that was basically Saudi first, right? Kind of like America first, but Saudi first. So you're running into a war between the Saudis and Biden, and they can wait it out, right? Like they can produce oil for pretty cheap. The U.S. producers, the problem is if we don't have higher prices, the higher
It's not
cost,
economical for us.
It'll be less economical for us.
How much? Like, what's the difference? Like, how much more expensive is it? I mean, I'm not expecting you to give me like an exact number,
All right.
but like roughly.
Today,
how much
oil was trading for $88, $89,
Yeah.
right? 1 year ago, it was trading for like $83, $84. So it wasn't some exorbitant fucking price, right, that we're suddenly paying. We paid a lot during the summer, but a lot of that had to do with oncoming demand. But what's interesting actually is that the demand growth that's been taking place has been sort of masked a little bit. It's been sort of disguised, and I don't think it's on purpose or anything like that. But over the summer, say in August, July, August, the EIA numbers for consumption were basically like we were consuming the same amount we were in 2020 during the summer, which is completely ridiculous because we were consuming, you remember what it was like driving through the pandemic because nobody else was.
Sure.
Yeah. It was like Walking Dead, like the very beginning, like it's just a wide open road. And so, wait, where was I?
You're talking about consumption of oil in 2020 versus now. How the
right.
How the
So
numbers are,
okay.
yeah.
So what's interesting is that recently the EIA came out, and I mean, like, numbers are made to be revised, right? So they do revisions all the time, but this one was more interesting because everybody called out that we were consuming more. The refiners were telling us they were seeing stronger demand. Companies were saying they were seeing stronger demand. It's clear that that the American economy was kind of chugging along, right? Like the roads are about as packed as I can even ever remember.
Yeah.
But supposedly, according to the statistics, we were consuming less than 2 years ago when there was nobody on the road. So recently, they just revised their numbers. And if you don't look, you'll never find them, by about 500,000 barrels per day higher than what they thought it was. So I'm kind of curious how many more revisions we're going to see until we start seeing the true demand.
Do we know why that revision took place?
So it gets into the complicated methodology of how the EIA calculates it, but I don't even want to venture a guess as to why they would do that.
It sounds boring.
You technically have two sets of numbers every week that come out, right? You have the EIA numbers and you have the API numbers, which is just like industry numbers. And it's just interesting how much of a gap there was, right? And so like that gets into a whole nother question of supply, of kind of this false sense of supply, right? When you get into inventory levels, right? We've been seeing like drawdowns. There was recently a really big drawdown, but we've been seeing big drawdowns in the summer, and then during the fall, it sort of started coming up a little bit at a time. And what's interesting is that you have to take into account that the White House is releasing about 1 million barrels per day from the SPR, right? So they're trying to keep that number inflated. Now, what's interesting, the last set of numbers was that there was a huge draw on crude oil inventories, but it was happening without or it was happening with the SPR releases, right? So it's actually when those SPR releases stop, which they're supposed to over the next 2 months, we're going to really start to see the true supply demand picture, and I think it's extremely bullish for oil. There was another part that I wanted to talk about real quick.
Could I actually? I want to kind of. You talked about the reserves. How does that really work? Like,
okay,
you kind of like it.
There's always scheduled releases of the SPR. You're constantly filling it, refilling it, right? And so.
And the government's obviously purchasing that from.
Sure. So they're basically selling that oil on the open market, and there's a certain amount of heavy oil or sour. There's a certain amount of light oil. So like light oil would be more like. Would be more refined into gasoline products. The sour is more like distillates, like diesel. And so it's kind of interesting how the SPR has been releasing a lot of sour oil, and we're now down. So it was about 400 million barrels, I believe. And I believe we're down to about half that.
Okay.
So like we're starting to chunk into it, right? Quite a bit. And one of the issues there is that the gravy train's going to stop eventually. We were doing about 900,000 to 1 million barrels per day since March or April.
Yeah.
Right.
And presumably at some point they
have to
refill it, right? Yeah.
Right. So the idea is obviously you buy it back when oil's cheap, but what happens if demand is stronger than you're letting on? I wouldn't expect most officials at the White House to understand the dynamics of supply and demand like the industry does. But you can't agree with the industry because you're attacking the industry because you're looking for those midterm votes.
So what's the end game for the U.S. here?
So we'll find out how insistent Biden is after the midterms in attacking oil. We'll see if he can bridge the wide gap that he's burned with Saudi Arabia. The Saudis have already basically declared they're on Russia's side. And I believe that they applied to be part of BRIC, which is Brazil. So anyways, we have to fact check that for sure because somebody recently was trying to get into BRIC that was interesting because it's like the up and comers like India, China.
Sure.
That's not Team West.
Who's in BRICS right now? It's Brazil,
India, China.
Is Russia in BRICS?
Mm-hmm. I mean, that's the natural. Yeah. Took me a second to think of that.
So what are some like kind of key investment like opportunities that you see around all of this? So we had like kind of like we have the diesel shortage. Is there any opportunity right now like a near term thing for the diesel shortage?
I think that my readers and I'm sure you can have a link right here.
Sure.
That you can take a look at.
You can promote your stuff, Keith.
We were looking in the drillers earlier in the year. We made out handsomely on the drillers. There was probably even second and third buying opportunities with drillers. And then probably around midsummer, we shifted toward refiners. And you get massive dividends from that sector or from that area.
Are those MLPs?
MLPs. Some are MLPs. Some are just normal corporations. But the difference that sets them aside is the dividend, right? You're not expecting a lot of growth out of a solid dividend paying stock, which sort of makes sense. Which a whole nother thing we should probably talk about at some other podcast is Brazil and what's going on down there with the elections, because Petrobras has like a 50% annual dividend right now.
So that was actually something I was looking into, and I don't know if you're like prepared to comment on it, but there was basically like a huge surge in imports into Brazil recently because of a drought. And is that going to kind of impact the situation? Is that going to reduce this?
I still feel like I got to do my due diligence on Brazil.
Sure.
I think the big story out there right now is what's going to be the fallout of this election.
Okay.
Basically, you have Lula, who's like pretty much socialist, going up against Bolsonaro, who was pretty much their version of Trump. And although Bolsonaro was supposed to win handedly, he actually squeaked out a loss.
Okay.
And so it was one of those 51-49 type situations. And right now, today, you have tens of millions of people protesting. You have to wonder Brazil doesn't really exactly have a great track record for stability.
Yeah.
This is also going to majorly affect the Petrobras, which pays out a rather massive dividend that I don't know if it's sustainable. I don't think it is. But if you're going to see Lula start messing around with like price subsidies and all that, you're going to have an issue. So that's like a kind of a dangerous, risky area to take a look at now. And if you see an opportunity there,
stay away from it.
Well, I mean, if you see an opportunity there that makes sense, maybe.
Yeah.
It's interesting how like it's going to fall out with oil production and all that, because we know the story of Venezuela. When that got nationalized, they basically kicked out every oil major in the country and just seized all their property at once.
Yeah.
So it's gonna be interesting to take a look at Brazil over the next 3 months, I'd say.
All right. What about the kind of European energy crisis? What are the investment opportunities there?
So last time we talked about LNG, right?
Yeah.
I told you about tanker stocks. I told you about just natural gas producers.
Yeah.
Right now, natural gas in the United States is actually falling because inventories are rising.
Yeah.
We produce a massive amount of natural gas in the United States.
When did they start falling? Because I feel like, but from the time that we had that conversation, LNG must have still been
Okay, LNG is
skyrocketing.
doing great.
Yeah.
I'm talking about natural gas at the Henry Hub,
Okay,
which is
gotcha.
basically
That's the US
U.S. That's where you get natural gas.
Okay.
And so, what's interesting is that LNG is the future. Like, there's no doubt. And so the EU, when we talked about it last time, we were questioning the storage levels, right? There was a scramble to store gas for the winter, right? The problem is they basically answered the call handedly. There's a glut of LNG just headed toward Europe. There's a tanker shortage. You have LNG tankers that have to circle islands because they can't drop off their cargo at the time, right? They have to wait like a week or so. So I think the opportunity there specifically is in the regasification facilities to get that gas into Europe. Right now, there's a gas.
There are companies that operate those facilities that are publicly traded, or
Yeah. In fact, we talk about them in The Energy Investor, and we are actually coming up on an interesting stock play. It's an LNG player, and they're in that position where they can provide regasification services as well as tanker services. Yeah. So. Something to look out for.
You are the second person to come on this podcast recently that's been very bullish on the tankers. And other person being Mr. Christian DeHamer.
Me and Chris might have to talk about the tanker market. I'm not as.
Is he stealing your ideas? Or
I'm not as convinced about the oil tanker markets.
Okay.
I think LNG is, and I'm not really bullish on LNG tanker market plays in the short term because of this glut. Right, tanker rates are falling. I think long term, I don't think you can go wrong with the right LNG play. I'm looking at U.S. exporters like Cheniere is a great opportunity.
Yeah.
The Freeport facility is supposed to come back online after damage. So you
is
have
that part of Cheniere as well?
No, that's Freeport.
Okay.
I'm trying to think of the ticker offhand.
People can Google it.
Right.
You can flash it on the screen. Whatever.
Right. Sure. So just to sum up, basically the European situation, you're looking at a situation that right now storage levels hit 95%. I think that was the last numbers like this week. So they've made their goal. They made their deadline. Now what's interesting is the gas flows, right? Because you can have as much storage as you want. If the winter doesn't turn out to be as mild as it has been, mm-hmm. then you're going to get into deep water really quick. And I think the IEA recently just warned about gas shortages in Europe during the winter.
Yeah.
So inventory levels are high, but when they start eating into that, you don't have the gas flow that you used to, right? You don't have the Nord Stream online anymore. Who knows who's sabotaging that? The Russians say the British are doing it. The British say the Russians are doing it. Sweden's not telling anybody what their investigation's coming up with. So, like, that's going to be an interesting little thing to pay attention to.
Sure.
Yeah. So, where was I on? Yeah, what was I saying about before I went on my little Nord Stream? So, gas flows. I'm sorry. So, what's going to be interesting is whether or not the gas flows can be increased because your LNG is going to make its way to Europe, right? But they don't have the facilities in place to take it to like places like Germany. That's why Germany is looking to build LNG facilities now. But that's going to take billions of dollars in 5 years.
So where do most of our exports go? Is that
right now
the
our
UK?
biggest I believe our biggest customer is Europe, which makes sense.
Yeah. But is it any country specifically in Europe that's
well to wherever the regasification places are, like
Gotcha.
Spain,
Yeah.
Greece, Italy.
Okay.
But the pipeline infrastructure doesn't really exist to get that
to
inland.
Yeah.
Yeah.
So can they truck it in? mean, obviously not. It's not as efficient, but
No, you can't. Yeah, I mean, if you could truck natural gas, it'd be a whole different situation.
So
here.
I was reading some research on Germany, and the shit is crazy. They're like, people are stealing firewood, and they're starting to put. I think it's in Germany. They're putting like GPS trackers in logs to track
that would make sense.
Firewood theft, which just sounds like something
that would
like
make sense.
Dystopian.
I think that Germany's more of a lesson and one that I don't see people getting. Right. I don't think they're getting this lesson of if we switch to renewables too quickly and we burn our bridges with fossil fuels, we're going to be in a lot of trouble.
Yeah.
Like we've said this for more than a decade.
Sure.
Like this bridge is not going to happen overnight. Natural gas is the most. It makes the most sense to go natural gas as the bridge to renewables. Yeah. But
at a time
dicey.
like this, it seems really crazy to me that you have kind of like the White House currently like trying to they're dying on that hill of being so anti-oil. And it just seems like when is it like a politically like intelligent move to just pivot? And
I'll let your audience decide who how political it's been, because I'm sure everybody's got a team that they like to play for. And sometimes you just want to sit back on the bleachers and look from above, and then, well, we're going to find out in about a week and a half where we really stand. And I don't know. It's going to get pretty interesting.
All right. Keith, it's been nice having you on.
It is always a pleasure to come on. We got to do this again soon.
I'm into it.
Excellent.
Can we, everyone like, comment, and subscribe, and we'll see you next time. But if we can add some bonus content.
Sure.
Jesus Lord, good start to the bonus content.
Cracking the.
I want to talk about. Info? I want to talk a little bit on the tech side of things, because you also, I think like your core focus has always been energy, but you kind of recently moved into the tech side, and I think you got some insight here. I bought Meta yesterday.
Okay.
I bought Meta Platforms. I don't ever like.
Is it
really...
because Elon, or is it because because Zuckerberg is doubling down and just?
No, so it is because it's a combination of the fact that the price has been absolutely freaking demolished this year, and they're like part of it's a value play in my eye, and then the other part is that the FCC commissioner came out earlier this week, was talking about banning TikTok, which is a absolutely massive. Massive.
Do you think that's going to happen, or do you think that's a threat to? Because obviously we've been in this cold tech war with China has been heating up.
Yeah.
Right. And it's been bubbling over, and Biden's CHIPS Act is probably the latest missile launch.
I think that's just beginning, and that's why I think that this is not just like, I don't think it's just lip service. I think that they are preparing the U.S. market for this type of ban. I really think that we are entering a serious long-term Cold War with China. It seems that the fact that they did the CHIPS Act seems like a very that's a major.
You're crushing China's semiconductor industry.
Oh, they're absolutely crushing it. But it also hurts. It hurts us as well. It creates a lot of inflationary pressure on tech stocks. Probably. I mean,
I'm not sure.
Maybe increases the chance that they want to invade Taiwan, because
that is probably the elephant in the room that people should start talking about, because the question is China emboldened by Russia's strategy to attack and then pull back and be like, all right, I'll annex Crimea. That's okay.
Yeah.
Pull back. All right. Well, we just want the Donbass to have free elections, and then just load up the Donbass with your voters. Mm-hmm. So is China emboldened from Russia? And obviously the two are very close.
I feel like they're I don't know, it's like they're adversaries, but they also have, it's the enemy of my enemy is my friend situation, it seems.
As much as I want to say it's a ridiculous notion that China would go toe-to-toe with the U.S. militarily like that. Because when Russia attacked Ukraine, they probably had no idea what they were getting into. I don't even think Russian forces understood how ill-equipped they were, and so what's interesting about China is I don't know. I hope not. I hope they back off and turn tail and piss themselves, but I don't. I can't really see that happening either. So what's next?
All right. As far as Zuckerberg's Meta ambitions go, who's gonna if anyone brings the AR VR that brings the metaverse to life, Who's it going to be? Is it Facebook? Is it Apple? Is it somebody else?
I'll tell you what makes me bullish on Meta is the fact that Kramer is bearish.
Okay, yeah, you're taking the anti-Kramer index.
I mean, he's done it with oil. I can remember wanting to trade Continental Resources the second he went bullish on it. I wanted to start buying puts right away. And
so he's bearish on Meta now? Like he
started out extremely bullish.
Yeah,
and then he had his profuse apology just recently.
I saw the headlines that he was crying on air.
I remember listening to it coming into work, and I remember he was just sobbing, and he was very contrite and very sad, and very, very bearish on this crazy tech stock.
Have you ever been wrong about a stock pick?
Of course I've been wrong.
Have you ever cried about it?
I've never cried about a stock pick. I could probably think of a few that have gotten me close.
All right, Keith. Good seeing you.
All right, thank you.
Take it easy.